Good morning from Toronto traders. It is 8 a.m. Chicago time, 9 a.m. Eastern U.S. time on Tuesday, the 24th of uh, May 2022. This is episode number 2239. Pretty interesting day so far today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Bit nasal. That's just maybe me. 1 second. Let's just make sure we're not picking up any other microphones. Yes, I see it. All right, that should be better, right? Mic check, mic check. Should be better. No echo now. Same. Okay. Well, guess what? Let's see. Echo. Okay, 1 second. How about now? Is it any better? Yeah, we're just going to have to live with this. I can't tinker around during the broadcast. Uh, we'll just move on. Uh, Again, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning on the Convergent Trading pre-market summary sheet, we see that the market's mildly risk off in posture this morning as we come in. The key news here, the key driver is Snapchat really missing on the lower end of their forecast. For those of you who don't know, Snapchat, you've been living under a rock or something. Snapchat is a social media app, very, very popular with the kiddos. Not as much as TikTok now, but it missed pretty handily and is guiding lower. And what that's doing is it's seeing knock-on effects to Facebook and others of the same sector. Snapchat's off quite a bit, I think around 28% currently. And this is trickling down or cascading through the techs. And you can see that the NASDAQ's really ahead on the selling, down 168 basis points, 200 points in the NASDAQ versus the S&P's 105 basis points or 41 points so far. Actually, that's right. It announced a bit ago, and it's pre-announcing really bad results to come forward. And what's expected is that those results will be reflected in other networks, and that's kind of what's driving things here. A little bit of a hangover from that. So. That's what's going on. China says that it continues to reopen gradually, very, very gradually. In addition to that, strangely enough, POTUS, President Biden yesterday announced that answered a question, reiterated that the U.S. will defend Taiwan in case of aggression by China, and that's kind of escalating the conversation there. Why is that? Why is this even a question currently? It's kind of interesting that and we're seeing. Remember, globalization is a huge thing. Everything's being globalized. We're seeing the Germans talking about refiring up their coal power plants if they don't get enough gas from Russia, so they're going domestic. And also Spain. Spain is saying that it's going to move towards spending billions of euros on creating chips domestically. So what we have is the pandemic and all these supply issues, especially the supply issues, are creating a huge political and economic headache. In that a lot of countries are now going to be moving back towards internalizing critical components that they need, as opposed to globalization and the efficient use of resources. So, pretty interesting. The earnings are all about retail right now. Pre-market Best Buy release. It's the biggest one. Best Buy came in and missed by about 4% on the earnings and beat revenue by 2%. AutoZone came out as well. AutoZone has $3.8 billion in revenue and beat on both the earnings and the revenue number, and so on. We have Nordstrom after the close, Intuit after the close, Toll Brothers and Ralph Lauren before the open, and so on. There's a lot that's going on in the retail sector in terms of earnings. This is their week. On the calendar, we had a few important releases this morning. We got the German S&P Global Manufacturing PMI flash, came in at 54.7 versus 54.1, so it came in pretty good. The Eurozone also had the same number, came in at 54.4 versus 55. Great Britain missed on the manufacturing PMI, but it really missed badly on the UK services PMI. It came in at 51.8, expected at 58.5. That was a pretty decent miss there. The US gets its S&P, the same S&P composite PMI flash for May at 945, looking for composite PMI, services PMI, manufacturing PMI at 945. New home sales at 10. That's a high-tiered number. That's why it's in bold on the sheet in front of you. And then we get Fed's Chair Powell at 12:20 p.m. Eastern, Lagarde at 2 p.m. Lagarde's the ECB's president, and that pretty much wraps up the calendar for the day. And so this is where we are. Turning our attention to the S&P. The S&P has traded 218,000 contracts so far. The inventory is 100% short. We gapped open on the S&P. We gapped down. We have an internal gap here. So the inventory is 100% short. The range is 43 points, smaller than what we had yesterday, and the point of control is stuck at 39.23 currently. And what is a balanced profile? So we're opening in range of yesterday in the lower distribution. We almost tested yesterday's low. Today's session low is 39.09. Yesterday's low is 39.0650. So we did pop yesterday as expected, but we didn't quite push very far. So yesterday, remember, I'm not going to show what lines I'd drawn yesterday, but let me close this here. But what happened yesterday? The expectation is we would drop off the open. We would probably pull back. We're likely to pull back, and then the expectation is we would push the overnight high, get through the 39.55, and end the one-time framing down, which is 39.41, and squeeze towards 4,000. That's what was expected yesterday. If you look at yesterday's video, and what we did is pretty much that. We dropped down at 39.06, and then we squeezed higher, and we had a bit of a kind of a funny top yesterday, a flattish top, and then this morning we came in and we found ourselves gapping pretty good here from 39.71 to 39.52. We're again below the 39.40 area. You know, we had a high at 43. We had a high at 41, and now we're finding ourselves underneath it. We are tangled in the full session mid, full session VWAP. We're right around the overnight point of control. We're opening basically in balance with the prior couple of sessions, overnight sessions. So if you look at these orange profiles, these are Globex profiles. You can see how they are stacking up on top of each other. If we look at the day session only, this is the day session. This is how the day session is shaking out, and we are trading in this distribution that we're starting to build now, right in here at 39.70 where we closed yesterday. Yesterday we closed some of the single prints from Friday. We closed some of the single prints from last week, Wednesday. Um, and we held steady. I expected them to actually push into 4,000 yesterday. It just didn't seem to have the energy for that. And the range was a little bit stretched anyway. We pushed 70 points yesterday in the RTH session, which is just above the expectation in terms of range. And so what we're doing here is we are remaining below this 40.15. We're building another distribution down here. We're seeing balance in this area that we're in now. So the market's actually moving despite the fact that it had taken out the lower high here and taken out the one-time framing down. It did not hold on to these upper prices. So we're opening right in here, and what that's doing is it's having us sit right around that 41, 43 area. We're in a teetering zone, and what we have to pay attention to today is whether or not they take out that 39.0650, yesterday's low. It's hard to say if they would, but the overall posture of the market is risk off. So the expectation is that's likely to flow into today's session. So it's likely to continue to squeeze and work. We start to work our way back to below that 3,900 and back into this spike day, this kind of push through and reverse day. So overall, um, I personally wouldn't be shocked if we see ourselves at 38.55 again. This 55 number yet again. We may find ourselves at 38.55 for another retest here. It just seems like yesterday's high was weakish, but we're opening below balance of yesterday. And we're opening in this kind of zone in between two distributions this morning. So to me, again, this is very likely to result in a two-way session. There's enough here for buyers to step in and look to push towards yesterday's settlement, or let me see what is going on here. So yesterday's settlement 39.71 here, or there's enough here for the downtrend to continue, right? Oops, didn't draw that very well. For that downtrend to continue, so we open, we attempt to push higher, challenge that downward sloping trend line, and make our way down to the 55 is the target. That puts us about 60 points away from the low, which puts us quite a bit away from where we are now. So to me, that's a very doable target there at 80 points away down at 55. That's the next key area down below. So that's really what I'm looking for today. That's the challenge I'm looking for to take on. Let's take a look at the picture here. Yesterday, despite the fact that the day session, which started right here, this is your day session, this delta was interestingly weak. The close had us buy, but overall, this delta is not like these prior days where we push higher on really good delta. The overall posture is that this rally here didn't really get very strong buy aggressor participation. The overnight session has a weak low, a double bottom there at the low. Again, it's still it's tangled in the key full session mid, full session VWAP, um, and against the overnight point of control down here. But overall, if we don't get a push, so that the plan today, the key element today is if we don't get a push higher immediately that tackles the 3971, 3972 for the prior settlement and the close, if we don't immediately push, we are very likely to be trading from the short side. This is the key expectation. I'll look for the fact that we broke the one-time framing down yesterday to reverse itself and for us to continue lower. This is how I'm leaning this morning. Let's take a look at what's expected for today, but I want to remind you that tomorrow, Wednesday, May 25th at 12 p.m. Eastern, 11 Central, I'll be on Futures Radio Show with Anthony Crudelli and the guys from Order Flow Labs. The topic is trading the indices using order flow. Of course, with that, EdgeClear is contributing over $1,000 worth of giveaways as part of this kind of talking about the market series that we're doing every month with Futures Radio Show. You get Edge Pro X and Rhythmic covered for 6 months. The user fee on Rhythmic and a full subscription of Edge Pro X for 6 months, and Order Flow Labs is throwing in 2 months of a subscription to their service and indicators as well. Tune in tomorrow. Make sure you enter by going to edgeclear.com/deli, and you must enter before the beginning of the show. So your entry has to be received before 12 p.m. Eastern tomorrow. You have right now, you can go fill out the form and enter yourself into this. So let's take a look at what's expected for today. A lot of music. Just setting up the chart here. It's wild to try to work off of a laptop after, once I leave my workstation, because of the way I'm set up with 4K TVs and stuff like that. To be hunched over a laptop, it seems so much more difficult. Okay, let me get it. I can hardly read the numbers. Getting old, folks, getting old. All right, so here's what's expected for today. Again, I see Mike here asking why immediately, because I'm looking, if there's going to be a responsive move, it's likely to happen off of balance and off of the base of the overnight point of control. So I'm looking for market on open orders that take this higher. This is what would reverse the damage that was done to the buyers and to prices in the overnight session. If we don't get immediately responsive, then it's just far too easy for the sell participants to push it down. You have your magnet underneath us right here at 3,900. This price of 3,900 has been a magnet for several days. You can see the point of control back here. You can see some high volume yesterday in the overnight session, and so on. It's just far too easy. In order to deter that push down, the push up has to happen immediately. So the expectation this morning as we open in balance here is an open auction. An open auction, it makes an attempt higher and then just pushes lower into the key balance area, the magnet here, the purple line back to 3,900, taking out the overnight point of control. And then I expect us to walk down these levels and to take back a lot of this multi-distribution profile that we saw last Friday. So I expect us to work our way down into that 38.55 areas discussed. This is what I'm expecting today. So the information, all the context, the narrative, the way it's set up, the fact that we have a weak bottom today, the fact that we have a multi-distribution profile on Friday, we sold off and we came back up 100 points. vertically, that leaves us with a vulnerable structure underneath the magnet. And so I'm expecting this thing to trend to the short side. Again, I will not be here to trade. I will be getting ready to get on a flight back to Chicago this morning. So I'll be watching it on my mobile app, but I won't be able to trade it. But this is what I'm expecting. Secondary is an immediate push lower. I expect them to tackle the overnight low, punch the magnet, and then if we see once we punch the 3900 or the magnet area or the overnight low, if we see an impulse up, this could really be trouble for shorts. It's likely to result in a squeeze. We're likely to push the overnight high as well. And then we're back to the 3971 and potentially higher. This is a lower probability play. And we have to see this arrow that I'm drawing here is very important. We have to see an impulse up. Okay. We have to see an impulse up early. So my suggestion to you, as it has been for the last couple months, is unless you're trading the one of those opening range plans or whatever, I think for everybody else, it is really, really important to just stay calm and relax for the first 15 to 20 minutes of the market open. It is best actually to do your homework, be prepared, and to get up and um, walk away and do something for the first 10, 15 minutes. Sit down, look at what it's done, read the market bar by bar to understand what the flow, which direction the flow is going in, and then step in as opposed to getting in immediately. Okay, so to me, let it tell us. We don't have to catch the top and the bottom. Remember, we don't have to catch the top of the bottom of every move. We're looking to make money in the middle. That's our job, is to make money in the middle. Yes, you get an accolade on Twitter or whatever with your friends if you caught the high and the low. But it's really important to understand that we make our money in the middle. We're like middlemen. We make money in the middle. We make money in a transaction. So let it tell you that it's not able to go up, and then start looking to get short on the short side. How do you get short? How do you position yourself short? Position yourself in such a way that you're leaning against something so that the market really has to work hard to go against a short position once the flow starts to the downside. This is what's important. We are transactional traders. We're not here to set a trend or to put in a high or a low. Okay. Just remember that. So calm the anxiety, calm the opening anxiety. You don't have to do anything for the first 20 minutes, 15, 20 minutes, even a half hour. Let the market set up, and there's plenty there to do. I'm sure many of you have lost money immediately at the open, only to fight to finally get it back later in the session. Well, how about we skip the part where you lose in the beginning and let the market set up, and then you can get a better chance. Okay, let the bigger traders beat each other up early on. Good luck, and I'll be back at my office tomorrow, and I'll catch you there. Take care.